In this video, I'm going to show you how I turned a $6,000 account into $37,000 in just 2 trades by utilizing stock options. So first and foremost, these results are not typical, obviously. I was willing to risk almost the entire account on these trades, which is absolutely something I do not recommend doing. I also have over 5 years of trading experience and was very patient, waiting for the right moment to take these trades. So the point is not to flex or convince you to buy a course that I do not sell, but rather to show you how being patient for opportunity and having confidence in the trade can yield massive returns. And on top of that, I have been going through a rough patch with futures intraday trading the last couple of months, and I just want to highlight how great swing trading can actually be, and especially if you work a regular 9-to-5 type of job. So let's get into it. Back in February of this year, the market created new all-time highs, but it did so on low volume with small mixed overlapping candles. Not a lot of gusto. Globally, economic conditions had lost some of its momentum. Germany's growth had stalled, China started experiencing consumer deflation, and Trump had threatened Mexico and Canada with 25% tariffs. On top of that, Bank of America reported that asset managers had not had this little of cash on hand since 2010. If asset managers are all in, who is buying the upcoming dips? With the table set for what I saw as a shorting opportunity on February 20th, I loaded up QQQ. This is the ETF equivalent of the NASDAQ index futures that I trade on a daily basis, so it is what I am most familiar with. The all-time highs were put in the day before, and we opened the morning with a nice round of selling. Shorting all-time highs is usually a fool's errand, and I do not recommend doing so, but I was looking at a lot of factors and saw this to be a decent place to enter my short. My goal for the first half of this year was to turn my neglected brokerage account on Schwab from $6,000 to above $25,000 to clear the pattern day trading rule and allow me to trade this margin account freely. Now for the expiration, I chose March monthly expirations, which would give me about 30 days. For the strike price, I went with $530. Qs were trading around $535 at this time, so the strike price was just a little out of the money. Finally, for quantity, I chose to buy 3 contracts. My thought entering this trade was that it was either going to boom or bust. We could easily float higher for the foreseeable future, but I was willing to let this expire worthless if I was wrong. I paid $791 for each contract, making my total risk roughly $2,400. The next day, I woke up in the red on my position, but I was not sweating it. I just wanted to see the all-time high hold. Fortunately, the rest of the day we sold off. What puts at 534, we're at 519 right now, so $15 about on those puts. The following Tuesday, we encroached the 100-day moving average, and I decided to cover 1/3 of my position here, selling 1 contract for $21.38 for a $1,300 gain. This also greatly reduced my risk. If the market shot up to new all-time highs and I held the remaining 2 contracts, I would lose a total of just $300 if they expired worthless. Now, a couple of days later, I sold another put as price came down close to $500, thinking we may get a little bounce at that psych level and I might as well capture some profit. I sold this contract for $25.32, locking in $1,700 profit on that contract and cementing this trade as entirely risk-free. Bought those last week. Drop. Covered one, I bought 3. Covered one at 511, covered another one yesterday, 506, and we're continuing to melt. So that, again, I bought these for $791 and they're trading at $30 right now. So just an outrageous return. Looks like my puts are opening up at $43, $3,400 on the position. Finally, on March 7th, as Qs approached 480, I sold my remaining put for $48.42. This brought my profit on the trade to $7,135 for a 300% return on this trade and a 119% gain on this account. At this point, I need another $12,000 to clear pattern day trading restrictions and feel that sweet, sweet taste of freedom. So we're in March and we just had a really nice sell-off, so I'm thinking 2 things. 1, I still believe we can move lower, and 2, I want to see a bounce, get smacked down before I re-enter short. I watched as Qs approach the 200-day moving average on the 25th, then get smacked down the following day. So I decided to enter the short on March 27th. I bought 8 contracts this time with a $475 strike price and a May 16th expiry for $11.30 apiece. My stop loss was above the 200-day moving average. This entry was just above where I had sold my last contract on the previous trade. Again, this play was timed pretty well, as the next day we got a nice drop on Qs. Ooh, so with the puts I bought yesterday, I'm up $2,700 on those. Pretty good. We then had a few days of opening a little lower and grinding up all session, but price stayed below my entry. My puts, it's kind of hard to see, I understand. My puts are right here, the Q puts. They're 475 strikes for May. And they actually, I was up 10 grand on Monday with these puts after buying them, I think, on Thursday. Anyway, they closed actually in the red, down $44, so pretty much right around where I paid for them. And so then after close, obviously we had a crazy move. Like, you know, it went up to 20K and then ripped down like, what, over 1,000 points on NASDAQ. I'll be interested to see, I'll have this up on screen because I want to see how my puts are going to open. Because the price will update. And right now it's trading, you know, at close it's trading at 11.24. I'm hoping, should be up over 100% now. That's the fun part about options. Even where it closed at, you know, which was $6 under my entry, the position turned red. And that has to do with the different ways options are priced. Let's try on like after hours trading here. It's pretty close to where I wanted to sell. My first target to sell is around 452 on Qs. So market's opening here in a few seconds. Let's see what my options will be priced at. Let's have a great trading day, all right? Be careful out there. So $26. So quick, 11,800 real quick. So that's cool. When we got a really nice gap down, my puts were $23 in the money, so I covered 2 contracts for $27.82. So up 150%, I will take 2 off now. All right, so took those off for $27.82. Again, this greatly reduced my risk by capturing some profit and taking a quarter of the position off the table. The next day, I ended up scaling out of the position entirely, right around where I wanted to hop out of another quarter. You can see I have an alert on Thinkorswim that doesn't trigger in after hours, but we did bounce there. And now I kind of just want to wait and see if we revisit this area of 435 and on below, and then maybe I'll look to take another quarter of the position off. I think I may exit 2 more contracts now. Gotta lock in some of this. So I'm gonna go ahead and do that. I'll have 4 left. I'll have 50% of my position still on.
Nice trade.
Yeah, pretty
really nice trade.
One of my better ones for sure. I sold in batches of 2 for $40.76, $50, and $48.61 for a total of $24,386 and a 269% return on this trade. This brought my account balance up to $36,000, well surpassing my goal of $25,000. The main takeaways here should be the following. 1, patience. Other than building a small position in Nvidia shares, the first trade that I covered at the beginning of this video in late February was my first options trade of the year. I was not trying to scalp every day. I waited until the time seemed right to put risk on. 2, time on the contracts. I wanted at least 30 days on the contracts, and opting for more would have been even safer. Definitely not weeklies or anything less. 3, confidence. I had many elements supporting this trade and I had high confidence in it. I was able to scale out as it continued to move in my direction. And if I pull up a chart of my entries and exits, I think I managed it really well. The entries were near swing highs and the final exits were near swing lows. My only regret is then not flipping long after exiting those trades, but that's hindsight talking. You don't have to, and frankly shouldn't, risk the amount that I did here, but if you can patiently wait for the right opportunity and hit a 300% winner on even a small amount, you're in really good shape. It was nice to move back to swing trading options after spending much of the last few years scalping futures, and now that I have the ability, I may trade more with equities and options because there is some decent benefit to doing that over futures. Come hang out in my Discord, it's 100% free, link is in the description, and join me live right here on YouTube for the first 2 hours of market open every weekday. I'll see you in the next one.